But I wanted to show about one example of you never know what can happen in this market. And I want to look at one of the best stocks in history, Apple. Let's look at it pre-financial crisis. So this was obviously, now we know the recent up legs in Apple, but this is kind of like, this was kind of driven by the iPod, and after 2009, that second bull market was kind of driven by the iPhone and the iPad. But this first leg up here was really driven by the iPod, which was such a cool invention at the time. So this had a really big up leg. But if you want to find one of the best moves in terms of percentage advances, see, here we advanced from $100 to $200. This is a double. Okay, pretty good. Here we went from 45 to 84, less than a double out of that basing structure. If we go back just a little bit more, one of the best advances Apple had in a straight line, because this had many legs, which is abnormal. Here we went from 17 to 45. So this was more than a double. This was almost a triple, not quite, but really nice, strong advance. Now, where did this take place? And again, most of the time these market corrections come around, everyone kind of stops looking at the market. Everyone loves the market when it's doing great, and it's no longer a good time to buy. And whenever the market's in correction, all of these great bases are forming. Everyone stops looking. Now, look at how similar Apple's action was in this basing structure to all the oil companies now, or even all the companies that are acting very strongly, even things like LNTH, et cetera. Look at how the NASDAQ was in corrective mode. This is 2004. So this was from February 04 to August 04. And this was about a 20% correction on the NASDAQ. So not quite 30%, but still substantial. Look at that AB relative strength that took place on Apple in that same period of time. And you see in multiple ways. Then you see a second AB relative strength here on this base and this base. Every time Apple based, it was a higher basing point. Every time the market based, it was a lower basing point. So it was really, really obvious. And if we kind of go back here, let me just zoom back a little bit more so it's clearer. Right here, perfect. So the second this market came off, this basing structure right here, that you can see right here, which was really wasn't a traditional cup with handles, really a coil type of pattern like I talk about. So this is not really a Bill O'Neill type pattern. This is kind of like the coiling pattern that I speak about in the course. That coiling pattern is right here on the daily chart. And let me just adjust these averages one quick moment. 50, 200. There we go. Now, look how similar this is to things like P10. We had this great three-touch trend line coming down. We broke out with very nice volume, and you got this very quick advance. Let's see right here. If you bought that three-touch trend line, you got a 13% advance relatively quickly. Patterson Energy is even stronger. Similar to the other stocks we looked at tonight, you had a mini coil right here, one red bar, two bars inside, right before the three-touch trend line broke. It's almost identical to how these other patterns are forming. And you finally broke out with good volume. Now, when did you have to buy this stock? Pretty much this happened a little bit after the low, but this market didn't really go anywhere for a while. I mean, after this initial pop here from August 13th to August 27th, you pretty much stayed in a sideways movement. Like if you look at the high reached here all the way to the lows here, this is a 2% advance over 40 bars. So that's 2 months. So the market advanced a net 2% over 2 months. In that same time period that the market advanced 2%, Apple advanced 49%. And that puts you in this amazing position that if you had built up a proper size, then you had this phenomenal position in what was not a great market. I mean, from thereafter, you made a total rally of 16%, nothing earth-shattering. And even as the market started to correct, Apple was so strong that this kept advancing. So you had 184% advance in, what's that, from September, October, November, December, January, February. In 7 months, you had 184% advance. Now, if you had 30% portfolio exposure, you almost moved up your entire account by 60%, at least 50% with one stock, with nothing else working for you, one stock, which I think a lot of people would kill for that in any year. And that's just one stock without anything else pushing your way. And during this advance, I'm sure there were others, but it's just amazing that this happened at the backdrop of what was a bad market. Now, also put your place in the place of investors in 2004. It's always easy in hindsight, never easy in real time. Look at the NASDAQ. Let me put a monthly chart because it's just so brutal. So 2004 is here. So let me just rewind it a bit more. Let's go to August, right about the time Apple's breaking out. Now, you're looking at this. I don't remember. I was trading at this time. I just probably had Bill's book for a few months. I think I got Bill's book in August 03 is when I found Bill's book. Anyway, so I can't, I didn't have the kind of knowledge that I have now. But I'll bet you if you file, China check will say, oh, this is just a bear market rally. This is a 30% retracement of this big drop. We're going to move lower where our target is for 600, blah, blah, blah. I bet you there'd be so many people that were negative. And then the market just kind of, did this, which is nothing significant. But if you, again, don't think about the fall through day as I need to buy or sell the market, but it's the right environment to be invested in. Over that same period of time, Apple did this. So you're buying these great quality stocks. You're not focused on the market itself. You just want to know when the market is healthy enough to start investing. And if we look at the patterns that we saw here at Apple during that period, again, 3-touch trend lines, mini coil, shaper pattern, AB relative strength, obviously booming earnings, booming sales, leader in the market. The second the market just went sideways and went up 2%, this thing went up 50%. Then the market got its act together and went up another 7 or 8%, and this thing went up another 100%. And if you weren't awake, if you weren't positioned well at this basing structure, where were you going to put on that position? It was going to be very difficult. And also a number of things you can learn from this one simple example. Look at the consistency. Similar, remember I've been talking about Devon Energy for weeks, how you can almost draw a line across the weekly closes. That happens all the time. That's an institution buying the stock. And look how Devon's still advancing. I can kick myself so hard for having sold that thing. It was a good trade though, thankfully. Also, look at how many weeks you had up in a row. Staggering. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks up in a row. And then after it went up 13 weeks up in a row, you went from 27 to 45. You almost doubled again after going up 13 weeks in a row. So incredible, incredible advance. But the foundation for putting on that wonderful position was really, I have to even go back to trading view because you won't see it well here. The foundation was put on right here. You could have put your first buy point here at this is now obviously split adjusted. I don't know how many times. It wasn't 49 cents, but 49 cents. You could have bought above the base breakout if you wanted to at 52 cents. You had a nice cushion. This actually made an extended mini coil right here. You can see this big bar, and after 3 bars sideways, so you broke out of that mini coil. If you missed that one, then you had another mini coil right here. And then from there, we just kept running and running. You had a buyable gap up. You could have added on a buyable gap up. And so there's no reason why you had another buyable gap up here. Again, there's really no reason why, if you were ready at this first 3-touch trend line, why you couldn't have had 3 buys like I normally do in a stock that then advanced 185% in only 7 months. And that's how, you're kind of sitting here and you're kind of fighting back and forth. You're protecting your account. You're not really making a ton of headway, but the market's down 30%. So if you're up 30%, 20%, 10% flat, minus 5%, you're doing okay. Obviously, the more you're gaining, the better you're doing. But you're always waiting for that right time where the market finally stops its fall, or at least just, it doesn't even have to go into a big bull market, but just kind of stops breaking down day after day. And the second that happens, that weight comes off, the leaders go crazy. So you need to understand the market. You need to understand the fundamentals of the company, and you need to understand the technical action, the basing pattern, the relative strength. You need to understand what a leader is, the accumulation cycle, life cycle of a stock. Everything taught in the course all comes into play. And so you can kind of see that in real time with a lot of stuff we're looking at right now. You take a look at a GLNG. Look at this. Beautiful strength, beautiful action. What else did we buy this week? P10. Again, market was awful. You had this great 3-touch trend line, blasts off. Very, very similar. And they all kick off with that same low risk entry that then you build into. And even if it's frustrating for 6 months, you're kind of chasing your tail, but you're managing your risk, small gains, some big gains, whatever, more or less. When you catch that 6-month trend, there's your year. There's your 3 years in 6 months. Very powerful stuff. So I just want to kind of mention how Apple's best up leg in that entire advance, percentage-wise, one of its best advances in the shortest amount of time. All these were good advances, but if you in log chart terms, these are not nearly as strong as what it did back in '04. And really, that really strong advance came out of the ending of a bear market, where this was showing relative strength in a coiled pattern that then kind of took off in a straight line the second the market stopped falling. And you didn't even go into a bull market. If you take a look, just for context, the NASDAQ basically didn't go anywhere for almost 2 years. And Apple kept running and running and running and running. And that relative strength kept going every time. Look, the market made a low here. Apple was here. Oop, my bad. Then, the market made a low here, which was pretty much in the same zone as here. And Apple was significantly higher all the way up here. Again, there's a log chart. So if you take off the log chart, it's a lot more apparent how much this is outperforming. And so, Apple was just screaming the whole time, and that relative strength was key. The coiling was key. The fundamentals were key. Everything really just comes together perfectly. And we're seeing that a lot in the oil and gas. Now, the only